Shaia Hosseinzadeh, Principal Head of Energy and Natural Resources at W.L. Ross & Company. Shaia, tell us a little bit about your practice at W.L. Ross, and then we'll get into some of the interesting energy questions these days.
Sure. Well, first of all, thank you for having me at the conference, Evan. It's a pleasure to be back this year. So what we do at the firm, we're fundamentally value investors, and we're trying to find ways to put money to work where we can buy good companies for good prices, good assets for good prices. What we're focused on right now at the firm is, as you know, there's been a big fallout in the commodity markets, particularly on oil, and we're seeing a lot of opportunities both on the equity and on the credit side.
So where's the pressure? Where are the problems specifically in the energy business?
Sure. So the pressure really started out, as you know, with OPEC in November, just after Thanksgiving, deciding that they're going to hold firm on their production. So that sort of started a cascade wave and a cascade of events. The first, really the ground zero, was the credit market, and we saw that really take hold towards the fourth quarter of last year. Bonds have seen somewhere between a 20 and 30 cent decline off of par versus the summer of last year. We think that as that makes its way through the cycle, the next phase is going to be in the equity side, on the M&A side, on the private side. So obviously the public equities have re-rated substantially. They're making 52-week lows. And we think by the second half of this year, once you start to see the impact of borrowing-based determinations in October, once the hedges roll off in the industry, and when you compound that with the amount of capital that the industry needs to raise, we think that'll lead to some pretty interesting transactions.
And what do you think the outcome is over the next year or two? How will the industry change shape?
So I think it's a great question. I think if you look at how we got to where we are, in 2005 we managed to commercialize horizontal drilling and hydraulic fracturing in this country. So the first wave was on the gas side. We saw a tremendous increase in natural gas supply. Towards 2011, 2012, we saw that spill over to the oil market, where we saw the rise in tight oil production. So during that period, we saw a spike in M&A activity. There's been, between 2005 and to date, there's been close to just over $500 billion of M&A. Our view is, when you look at the actual prices that are paid for that M&A, for those M&A transactions, most, if not a good portion of them, are uneconomical at current prices. So when you look at what the impact is going to be, we think that there's going to be two key players in this market going forward. We think there's going to be the large, well-capitalized strategics that will consolidate.
Name some of them, just who
there are a number of folks out there like Occidental Petroleum, EOG, very well-run companies, great balance sheets, that have been very aggressive, diverting their capital expenditures away from drilling towards buying. So those will be the larger ticket items. On the smaller side, you're going to see a greater role for private equity, particularly those firms who have a good bit of dry powder and are going to be coming to market opportunistically when that M&A market opens up.
And what's their time frame? Do you think that the patient money are the ones who have dry powder? What are they looking for in terms of when things might turn around?
Yeah. I think right now we have a little bit of a disconnect in the M&A market. So the sellers are looking backwards. They're looking at 2014 type valuations. The buyers are looking forward. And because we haven't had that price discovery, the M&A market has been a bit of a lull. My own sense is, as you sort of go towards the second half of this year, as I say, you have hedges rolling off. You have banks that are going to be a little bit more picky in October with their lending criteria on the borrowing basis. And then you're going to have a number of players that just need to raise money. So I think the confluence of those events, if we don't see oil come up substantially, is going to lead to a lot more sellers coming to market. And we think that's going to be a buyer's market.
And as far on the demand side of things, do you see any big change in global demand over the next year or so?
Demand for oil has been relatively flat in the developed countries. So the marginal demand source has been emerging countries. And China has been transitioning its economy from a manufacturing base that's much more energy intensive to one that is a little bit more slanting towards consumption, which is a little less energy intensive. So demand has not really been growing at the rate that I think most of the industry would have liked to seen. This downturn is fundamentally all about supply. So what happens with OPEC in Vienna later this year will really be the thing to look for.
Well, we'll keep our eyes open for it. Thank you, Shaia. Thank you so
pleasure.
much for being here.